The entire market is holding its breath, waiting for a single moment that could define the future of technology and investing. All eyes are on one event, Nvidia's highly anticipated earnings announcement, a report that could send shockwaves through Wall Street. On August 27th, the undisputed king of AI will reveal whether the artificial intelligence revolution is truly living up to the enormous hype and expectations. This isn't just about one company or one stock. Nvidia's results ripple through the entire tech sector, influencing giants from Silicon Valley to global markets. With a staggering market value over $4 trillion, Nvidia now makes up nearly 8% of the S&P 500, making its performance critical to the entire index. Every quarter, the company must prove that demand for its cutting-edge AI chips is still surging, powering everything from data centers to self-driving cars. A strong report could ignite another tech rally, sending stocks soaring and fueling even more excitement around AI innovation. But any sign of weakness could trigger a massive sell-off, shaking investor confidence and casting doubt on the AI boom. This is more than just a financial update. It's a crucial test of whether AI's bold promises are finally turning into real sustainable profits for the industry. Will CEO Jensen Huang deliver another blockbuster quarter and keep the AI dream alive? Or will sky-high expectations finally collide with reality, forcing a painful market correction? The answer to that question will shape not just Nvidia's future, but the direction of the entire market for the rest of the year. When Nvidia reports, it's all about the numbers. Wall Street expects earnings per share between 94 cents and $1.01, up from just 65 cents a year ago. Revenue is forecast to jump nearly 50% to around $45.9 billion for the quarter. These are legendary growth numbers, and anything less will disappoint. The stock is priced for perfection, so even meeting expectations might not be enough. To excite investors, Nvidia must beat these high estimates and raise guidance for next quarter. The report will reveal if tech giants like Amazon, Microsoft, and Google are still spending big on AI. Strong numbers validate the AI boom. Any cracks could send shockwaves through the market. This is a make-or-break moment for the entire industry. All eyes are on Nvidia to see if the growth story continues. The wildcard for Nvidia, China. U.S. export restrictions have blocked sales of advanced chips, but a breakthrough could be near with the H20 chip. If approved, H20 sales to China could add $15 billion in revenue and 50 cents in earnings per share. This would be a game changer, opening a massive new growth avenue. But the risk is real. Regulatory uncertainty makes the timeline unpredictable. No update or a denial on H20 sales could spook investors and sink the stock. Any commentary from management on China will be under the microscope. The H20 decision could swing Nvidia's stock by double digits. Until then, China remains both a huge opportunity and a major risk. Despite Nvidia's long-term success, the market is nervous. The stock recently suffered a 2-week losing streak, reflecting broader tech sector jitters. After a 1,400% gain since 2022, volatility is the new normal. Investors worry about a potential AI bubble and Nvidia's sky-high valuation, trading at 43 to 60 times future earnings. At these levels, there's no margin for error. Any earnings miss or weak guidance could trigger a sharp correction. Bulls see Nvidia as the leader of a tech revolution. Skeptics see risk in the lofty price. This tension is fueling wild swings ahead of the report. Everyone knows how much is riding on this single announcement. Wall Street remains overwhelmingly bullish on Nvidia. Multiple investment banks have raised their price targets, some as high as $240 per share. Bulls point to relentless demand for AI chips from tech giants like Meta, Microsoft, Alphabet, and Amazon, making up 40% of Nvidia's revenue. The upcoming Blackwell chip platform is expected to trigger a massive upgrade cycle and cement Nvidia's dominance. For optimists, demand is off the charts and the technology is unbeatable. But cautious voices are growing louder. Skeptics warn that the stock's valuation is unsustainable and perfection is impossible to maintain. Some studies question whether companies are seeing real returns from their AI investments. If businesses pull back on AI spending, Nvidia's growth story could unravel. The stakes have never been higher for both bulls and bears. When the report drops, A few key factors will drive the stock's reaction. Investors and analysts alike will be on the edge of their seats, dissecting every piece of information. First, China. Approval of H20 chip sales would be a huge catalyst. Delays or denials could spark a sell-off. The geopolitical landscape and trade relations will play a crucial role here. Second, demand for the new Blackwell chips. Investors want to see strong orders and a smooth production ramp. Any hiccups in the supply chain or production could lead to significant concerns. Any sign of supply chain issues or weak demand would be a red flag. The market is highly sensitive to disruptions, and even minor issues can have amplified effects. Third, spending from the big tech hyperscalers. If Meta, Microsoft, Amazon, or Alphabet slow their AI investments, it's bad news for Nvidia. These companies are key drivers of demand. Finally, guidance. With so much growth priced in, Nvidia must offer an outlook that exceeds expectations. Investors are looking for reassurance that the growth trajectory will continue. Even a hint of slowing growth could shatter investor confidence. The market's reaction can be swift and unforgiving. The combination of high valuation and weak guidance is a recipe for a rapid correction. Investors are wary of overvalued stocks, and any negative news can trigger a sell-off. Every word from management will be scrutinized. Their statements can either instill confidence or cause panic. The stakes couldn't be higher. The outcome of this report will set the tone for the market in the coming months. So what happens after Nvidia reports? The answer could shape not just the company's future, but the entire tech sector's momentum. Investors everywhere are watching closely, waiting for the numbers and the story behind them. If the company beats expectations, raises guidance, and announces H20 approval, the stock could soar to new highs. Such a trifecta would signal that Nvidia's growth story is far from over, and could spark a fresh wave of optimism across the AI and semiconductor space. On the flip side, a miss on revenue, earnings, or guidance could trigger a sharp sell-off. Disappointment here might rattle not just Nvidia shareholders, but also investors in related tech stocks. Weakness in Blackwell demand or bad news from China would amplify the drop. These risks are top of mind, as global supply chains and geopolitical tensions remain unpredictable. There's also a neutral scenario. If results are just in line and guidance is solid but not spectacular, the stock could trade sideways as investors wait for the next catalyst. Sometimes no news is just no news, and the market pauses to catch its breath. As an investor, watch the headline numbers, listen for China updates, and pay attention to Blackwell demand and forward guidance. The details in the earnings call and management's tone can reveal more than just the raw figures. These are the data points that will set the market's direction. Every detail matters when the stakes are this high. This report is pivotal, not just for Nvidia, but for the entire AI narrative. The outcome could influence how investors view the future of artificial intelligence and its role in the global economy. Are you a bull or a bear? The clock is ticking, and the market is holding its breath for what comes next. Let's see what happens next. The stage is set, and the world is watching.